How to pick the right home loan for your first home. In other words, you're going to be buying your first home. Let's talk about what you're going to need to do to make sure that you're getting the right home loan. Because I got to tell you, like right now, it's really it's frustrating to talk to folks that didn't use the Mortgage Mark team to hear what happened or why they did things, and you just kind of shake your head and be like, man, if only, right? If only you'd have called and we'd had that conversation. Because the wrong loan, it can end up costing you significant amount of money. So let's talk about the big picture. So if somebody's buying their first home, how do they make sure they get the right home loan? The reality is it's going to be this video is not going to solve that problem, but it's at least going to give you pointers of what to think about. So when you do reach out to a lender, hopefully, the Mortgage Mark team, but these are the things you need to have ready to answer. So when somebody's buying their first home, and it can be the spectrum, right? A lot of first homes nowadays are, man, that was my third home that I bought. It was like these young, and I would say young, but there are young people buying homes where mom and dad are coming in and putting big down payments with them. And there's just young professionals that have made a lot of money, and good for them, and that they got big down payments. It's not your typical what you think first time home buyer. So uh, the first time home buyer, again, any age, doesn't matter, any geographic, any economic, whatever you want to say, they're all going to have the same questions asked, which is, okay, how much do you want to spend out of pocket total? Right? That's always going to be the first part, and maybe zero. They'd say, I just don't have a lot of funds. That's okay. There are zero down options. There's some great bond programs, grants, DPAs, all that stuff. I know we have those. You can find those somewhere on our website, or reach out to us if you got questions. But how much do you want to part with when it's all said and done, the dust clears? What do you want to part with? And some folks, not many, but there are some that keep it close to the vest. Well, I want to tell you, well, look, I don't care. You're the one buying the home. It's like, just because of the money you have, first of all, I'm going to find out too, by the way, if we do a loan together, I'm going to find out, but I just need to know to help you work backwards and answer those questions. So one is, how much do you want to part with out of pocket? Because then that can help us work backwards as far as, down payment and things like that. Number two, what do you want to spend? Like, what's that range of the monthly payment that you're looking for? Where's that sweet spot, and where's the absolute like max? Because again, with those two numbers, we can start working backwards to figure out how much home you're really going to buy. Because you say, I want to part with X, I want my payments to be Y. It's just math working backwards to where you get that purchase price. So then we can at least establish, here's what you're going to buy. Here's how much you think you want to finance, or at least somewhere between. Because you might say, man, I can put down zero, or I can put down 10%. Right. So on a $300,000 home, that's $0 or 30,000. It's kind of a big range, and that's fine. But at least we now know options. Because then we start looking at programs. We would look at credit. Credit would be the other one that says, man, let's take a look at credit. Let's see what you got. If there's any room for improvement, can we do things like maybe take some of the money in this example? Let's say it's $30,000 somebody has. Maybe we use 10 of that to pay off or down some debts to help them qualify, or maybe to improve their credit scores so that when they do go to buy, they can get a better interest rate. So I think that's the other part, is to say, how much money do you have total that we can play with? What's that monthly payment that we're looking for? And then let's look at the program options that just tell you which one's going to be the best one for you, right? So you got FHA. It's often dubbed a first-time homebuyer program. It's not exclusive to first-time buyers. It's just used because they allow for manual underwriting. They allow for, more flexibility in debt ratios and things like that for qualifying. If you're a veteran, absolutely, we're Explore VA for sure, right? That's a fantastic program, zero down, no MI. It's an awesome program. USDA, if you're looking in areas where USDA might be an option, it's more rural, right? You got to find a house that qualifies for USDA. It's not just you, the human, it's the house. Those are the government-backed loans. Then we'll also explore what's called the conventional or conforming loans, and that could be Fannie Mae, Freddie Mac, if it's a jumbo, depending on how big they're buying. But those are going to be just, what do we look at? And you can do zero down there, 3%, you can do 3.5, you can do 5, you can do anything beyond. It's just making sure we explore all those options to fit the goals we have, and money out of pocket, what we want to spend. So have those numbers ready, and, talk about that, do your budget, figure out what you want to spend each month, what you don't want to spend, right? And what you can spend. And also, I would also say that the other part is, if there's something in the future is coming, let us know. Like a job promotion, big bonus, an inheritance, something like that. That may have some bearing too, to make sure we're just exploring all the programs in between, to make sure all the fixings are at least presented, and we can make a good recommendation. So I think those are the big questions I would start with, to figure out which home loan is right for your first home. And again, if you have questions, please reach out to the Mortgage Mark team. We are here to help. And then, as always, when you think mortgage, think Mark.